Hello, Maverick traders, and welcome out to your daily currency recap. This is Ankit here, and let's break down today's market price action. It's a Tuesday, October the 22nd. Let's get into it. As we always go through, we'll be taking a look at broader market analysis, and we'll take a look at currency baskets, any major news reports, and then we'll take a look at some possible setups ahead. Let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So looking at a market analysis, let's just jump right into the numbers here, and you can see that it was not really a great trading day. So news of the day, flat overall in the markets and low volatility environment across the board. So today, it doesn't matter, you take a look at equities, you take a look at currencies, you take a look at bond markets, everything was more like on the down low. And you can see that in the percentage change. Look at the percentage change. I mean, the biggest down move today was 0.34. And the biggest up move today is 0.41. So you can see that these are not the greatest numbers. And everything else just sideways in the middle. So these are not the great environment where you want to be active. And more like this seems like the calm before the storm. Remember, we still have an important jobs data that's going to go through next week. And then we have the elections in the following week. So next couple of weeks, a lot can change. But for now, nothing is really changing as much. Now, if you take a look at the broader markets, you'll see the same thing. S&P flat today, world stock index slightly lower, crypto lower. Gold is the one that's been the best performer. I mean, if you take a look at yearly results, gold has been the best one. And so far, no end in sight. And we're looking at the oil sort of rebounding as well. So really, action, some in the commodity markets, but outside of that, pretty flat. Here we are looking at the numbers in the crypto market, and you can see that it was just not a great trading day in crypto either. Even though cryptos are trending a little bit higher, you can see that they were not really performing as well today. Now, if you take a look at our market outlook, well, has anything changed? Well, nothing really has changed. Here we are in the markets. We are still in an uptrend, sort of basing a little bit. Getting a big candle change today? No. I think we're in this consolidation phase here. But again, the trend remains bullish, and there's just nothing out of the ordinary that we're going to take a look at and say, well, oh, today was a turnaround day or it was a reversal day. None of that. Like today, it's just a small inside candle in this range, nothing too major going on. Now, as far as the news event goes, and I highlighted that in the currency room, that this week is not a big week when it comes to news event, but we still have some handful of news events to go through, and that's why I really like Wednesday and Thursday for some trades. And the first one is the Bank of Canada. Look at that. They're expected to raise by 50 basis points. And again, this will be an aggressive cut. But again, they're probably following suit with the US. And I've already highlighted that Canada has been more aggressive in their rate cuts. So if they come up with the 50 basis point, I think that's kind of priced in. But we really have to see it's what says in the statement. Are they dovish? Are they going to be less dovish? That's really where we're going to see a movement. And again, if they do not a half, but a 25 basis point, again, that would be a mispricing where Canadian dollar can jump just because of that. But right now, as I was reading all the expectations, they're all expecting sort of a 50 basis point rate cut. Now, outside of that, tomorrow what we have, and I'll be taking a look at all the cat crosses. I really like Thursday for economic data, as we have the US, Euro, and Pound PMIs. And remember, we're not just looking to trade off the news event. We're looking to see, okay, does that cause a catalyst? And does that change anything for the currency? Does it propel higher or does it make a turnaround? So sometimes we get a nice follow through trade off these news events. So that's something we're going to take a look at. But my plan is to be less active this week. I'm only looking at tomorrow and Thursday. But really big focus is the next couple of weeks where we have the elections and we also have a lot of the data coming out, especially the U.S. jobs report. Remember, the jobs reports are the one that's really moving right now. It's not the CPI number, it's the jobs number. So let's just jump into our currency analysis and let's just take a look at where the velocity score is, and then we'll take a look at some possible trades. Let's get into it. So if you take a look at where the velocity score is right now, I mean, we are not seeing the biggest divergence. I mean, take a look at there's CAD, Aussie, Swiss franc, dollar, they're +2. And then euro is the only one that stands out, being the weaker currency. And then, of course, we have the yen that continues to be the weak currency. So really, outside of the euro and the yen, you can see Kiwi and the pound is more in the middle. And again, not a great environment where you're getting a whole lot of divergence. There's definitely smaller movements happening here and there if you should take a look at the percentage change. But if you're looking for that next big trade, I think you got to be patient at this time because we don't have any catalyst on hand. So until we get a catalyst, we just have to be holding steady here. So let's just jump into our possible trades ahead and let's take a look at a lot of different things here.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
As we jump into the charts, I want to talk about certain things that are happening this week that's really causing some of the stir. Now, first thing is the bond yields. Remember, the bond yields were pulling back. And again, I had a lot of questions about this, that we are in this rate cut cycle. Across the world, everybody's cutting rates. Then the Y yields are rising. And again, that's not just a US phenomenon. Take a look at where we are in terms of yields. So we are pretty much back to where we were back in August. And remember, we had that big rate cut that came right here. So we have recovered some of the grounds here. And the question is, we're not in a rate hike cycle, then why the bond yields are rising? And again, there could be a lot of different things, but notice that this bond yields really started to rise when the U.S. employment report that came out really turned things around, because remember, strong economy is going to delay the process. And then again, there's always that fear of inflation picking up again. So, but one of the interesting thing I find that this is not just a U.S. phenomena. If you take a look at bond yields across the world, I mean, let's take a look at the Canadian dollar CAD yields. You can see they are off the bottom. You take a look at the Australian dollar yields; they are rising. Kiwi. Again, all bond yields across the world are sort of rising, and again, that's a bit of a puzzling situation here, because we expect the trajectory for the yields to come down and the bonds to go higher, and that's just not what we are seeing here. So that's why we're just getting this this confluence in sort of movements here, because everything else sort of rise here. So what should we sell and what should we buy? They're all kind of moving around the same lines. So I want to take a look at dollar first. Remember, dollar is the one that's actually done a nice trade, one-way trade. Remember how awful it looked over here? And then now it just looks extended. But that's really where the movement is. Now, we are running into the overhead resistance, which is, again, prior to support is now the resistance. So we're just stalling a little bit here. But at the same time, let's take a look at 4-hour chart. Now, 4-hour chart, do you see a turnaround at all? I don't. I mean, take a look at how consistent this moving average is, the exponential moving average has been. It's slowly guiding higher. I mean, any pullbacks get bought out. A lot of consolidation. Notice that breakouts and get consolidation, breakouts and consolidations. So at this point, no turn in sight whatsoever. So one-way trade, and this is where you want to continue with that direction until we get a change in the direction. And right now, we don't have a whole lot of change. Here we are with the Canadian dollar, which is, again, it's going to be the focus tomorrow. You can see that even though they're expecting a jumbo 50 basis point rate cut, we're not really seeing Canadian dollar that weak. Again, it could be the proxy as the CAD and the dollar kind of doing the same thing. But remember, they do diverge from time to time, and dollar CAD is a good testament here. You can see how, I mean, from this point here to this point here, look at the divergence between the dollar and the CAD, which means that the dollar was way outperforming the CAD. And now here we are, reaching the overhead resistance and sort of pulling back a little bit. So in the shorter term, you can see that this thing has this overhead resistance, which is right about 139. And, the bottom area is about 130-150. There's quite a bit of range here. So at this point, again, if you just want to trade the news, if they do come with a rate cut, that 50 basis points, again, that's a big policy divergence. I won't be surprised that, we see the dollar CAD go higher. But the question is that, is this going to hit an overhead resistance and stall there? Well, right now, that's what it looks like here. So if you take a look at the 4-hour charts, just, right now, just in a bit of a pullback formation here. But right now, this in the last few hours, haven't really changed as much between the CAD and the dollar. So one thing you do want to take a look at with any news events is, are we getting a buy the rumor, sell the news? Or are we going to just get a one-way catalyst moving in one direction? So remember, as we take a look at CAD, the price action, the way it's moving, is moving higher. What we expect in the policy tomorrow is a rate cut. So there's a bit of a confluence between the direction that we are seeing right now versus where we are as far as the fundamentals go. So last week was a great example where CAD CPI came out. Initially, it sold on the news, and then it just started to run higher. I think it was right around here and just started to run higher. So sometimes we get this price action where it's not about the news; it's about a follow through. So as we go into that report tomorrow, what's the bias here? Are we, as far as the direction goes, we are range bound. So this is a range bound price action. If it wants to go higher, it needs to break above this area. If it wants to go lower, break below this area. So you got to be careful about this rate cut tomorrow because, price action is not giving you a great indication. But what we're going to do is we're going to look for the initial price action and see what kind of follow through we get. If we sort of recover the initial move, then, that was a short-term sort of a correction and it's just going to continue going that way. But right now, it's pretty much a coin toss here. If you want to be looking at short the CAD, again, dollar CAD I still think looks the best here. Again, we have 139 as a level of resistance. So I don't be surprised that we get that. But again, right now, you can see that it's hitting in this overhead resistance area. So risk to reward doesn't really look the best. Now, can we look at opportunities anywhere else? But remember, we got to take a look at what the trend scores are telling us. Well, you can see that the trend scores, the only one that we have on the weaker side is this first one is the yen. You can see yen has a good trending score. It's almost getting in this oversold area, but that's really where the yen is moving. We have the euro. That's really moving down. So that what's the weakest? So euro is the weakest, yen is the weakest. Now, what's the strongest? The Aussie's holding it much better here. We're taking a look at pound. Those pullbacks get bought up pretty quick, but they're not really breaking out any major support or resistance. So they're a bit of a sideways here. We have Swiss franc that's going sideways. So you want to avoid some of the currencies that are just not going anywhere. So this is why we end up just coming up with some handful of currency pairs because a lot of the currencies are getting range bound. So the only thing that's moving, dollar. The only thing that's really moving here right now is the yen. So you got to really focus on what's moving and then don't get tied up in currencies that are not moving. Here's Kiwi as an example. Take a look at the currency basket. It's not really going anywhere. So there's no point trying to figure out where's the Kiwi going until or unless it really breaks some key support or resistance level. And that's just the range that we're dealing with here. So that's really where we are at. So if I want to go with, let's say, a strong CAD, just in case, if there's a strong CAD, I think we can take a look at the euro against CAD. It's right up against the support here. The next level support comes at about 148. And again, this is the 4-hour chart, but on our hourly chart, they're all sort of doing the same thing. It looks pretty extended right now, but any sort of bear rallies could be shorted here. But right now, I don't see a trade to jump on. I will be holding till tomorrow after the news event and then see what the price action tells us. Because remember, we don't want to be just going in with some sort of a bias and not really get any confirmation. If the bias is strong or weak, yeah, we can really play those stat. But then when we are kind of in the middle, where CAD is just not giving us a strong signal either on the bullish or the bearish, and I'm looking at the daily chart for that, you can see that this thing, sometimes could be a little tough to make a call on. But after the news event, we'll probably have a better idea. Now, this is really all we have. We can also take a look at CAD against the yen. And you can see that CAD against the yen looks pretty good as well as far as the bullish candidate goes. They take a look at how sideways basing has been happening since, for the last 3 weeks. So if the CAD wants to strengthen, I think we could take a look at CAD yen as well. Along the lines, we can take a look at Aussie yen as well. Probably doing the same thing. A lot of the high basis formation happening in yen pairs. And remember, we already got a nice breakout in dollar yen already. Here we are, dollar yen. You can see that this thing is already breaking out. So the other could follow suit. But right now, can't really. I would love to come and say, oh, this thing is changing and we got to make a shift. But when things are kind of going the same way, you just have to sort of continue following that direction until you get a catalyst, you get a move that will tell you that maybe this is a reversal point. So overall, I think the market volatility likely to remain low, and Bank of Canada will be in focus for me tomorrow. I'll be looking to trade around that. And then again, we'll talk about Thursday for those PMI numbers. But tomorrow, primarily looking at all the CAD crosses. And as a trader, you want to go with the best case scenario and the worst case scenario. But I'm looking to trade the price action after as a second stage entry, not as initial entry, because I don't really have a great call on what the Canadian dollar is going to do. But again, if there is any discrepancy in the results, for example, if they do cut only 25 instead of 50, that would be initially positive for the CAD. Or if their statement comes out and says, well, this is a 50 basic cut and we're going to take a bit of slow after that, that could be a little bit less dovish of a cut as well. So that's really where we can see some movements. So be prepared for best and worst case scenario. Thanks for joining here. We'll see you in the next one. Keep the powder dry, as we always say, and look for the next opportunity. Take care, everyone.